wild final half an hour of trading is commencing here on Wall Street while one financial firm celebrates its 10-year listing anniversary inside this iconic building. Good afternoon and welcome to NYSE TV Live. I'm Trinity Chavez and today is Wednesday, July 31st, and we are coming to you from the global epicenter of financial markets. And in just about a half an hour, consumer financial services firm Synchrony, which trades here at the NYSE under ticker symbol SYF, will close out the U.S. equity markets for the day by ringing the closing bell. But first, we want to give you some breaking news coming down this afternoon. The Federal Reserve has kept interest rates unchanged at 5.25% to 5.5%. The central bank has held rates steady for a full year, with the last hiking coming just last July when the Fed took the range to its highest level in over 2 decades. Following the decision, Federal Chair Jerome Powell said that the Fed has made no decisions on a potential rate cut in September yet, but that the U.S. economy is moving closer to the point at which appropriate rate cut will happen. He added that the totality of the data, the evolving outlook, and the balance or risks that are consistent with rising confidence on inflation and maintaining a solid labor market, a reduction in rates could be on the table as soon as that September meeting. Now, it looks like the Dow Jones is up by roughly 100 points. Major averages are higher, and we will be covering this more extensively in today's broadcast as we continue to monitor the latest market reaction to today's Fed decision. Now, the Fed's fight to tame inflation is impacting consumer spending habits as well, and this is why the company is ringing today's closing bell, and this is where it comes in. Synchrony is a consumer financial services firm on a mission to deliver one of the most complete digitally enabled product suites in the industry. From a plethora of credit card offerings to banking solutions like CD accounts and high-yield savings accounts, Synchrony is looking to help consumers make smart, informed choices so they can live healthier financial lives. Now, the company boasts an ecosystem of retailers, merchants, manufacturers, and healthcare services providers that help consumers address their specific needs to deliver seamless omni-channel experiences. Synchrony has been helping customers for a very long time as well. It traces its origins back to 1932. Some other fun facts about this company and its reach is that it has more than 73 million active customers, processes over 240 million transactions per month, and has approximately 475,000 partner locations. And when it comes to the credit card offerings that we mentioned just a moment ago, Synchrony offers its customers several different types of products. First, Synchrony Network Cards aim to enable customers to find the card that fits their specific needs by sector. Cards range from Synchrony Home for items around the house to Synchrony Luxury for jewelry, and even Synchrony Sport, which can be used at places like sporting goods stores and bike shops. Next, Synchrony's credit card and health and wellness credit card gives consumers financing options for dental, vision, pet care that costs over 270,000 locations nationwide. Meanwhile, the basket of Synchrony MasterCard offerings more closely resembles the all-encompassing credit cards that you'll see across the other major banks. For example, the Synchrony Premier World MasterCard, which carries no annual fee and earns 2% cash back on every purchase. Finally, Synchrony works with retailers across the U.S. to create private label and co-branded credit cards. Notable brands include Lowe's, which also trades here at the NYSE under ticker symbol LOW, American Eagle, another NYSE-listed company under the ticker symbol AEO, Verizon, which also trades here at the exchange under the ticker symbol VZ, and Sam's Club, a subsidiary of the retail giant Walmart, an NYSE-listed company trading under the ticker symbol WMT. Now, I had the opportunity to speak to the team at Walmart in Las Vegas, but we will get to that later. First, Synchrony doesn't have a brick and mortar locations for consumers as an online bank, but that doesn't mean that people don't have the same options when it comes to investing for your saving. Well, when it comes to investing and saving for your future, rather. Online banks tend to offer higher interest rates than brick and mortar banks when it comes to high yield savings accounts, and Synchrony is no no exception. The bank's currently offering 4.75% annual percentage yield, or APY, and according to the company, the average APY across all banks is just over 0.5%. Another safe way for people to save is through CDs, or certificate of deposit. A CD account earns a fixed interest rate for a specified term, which is determined by the consumer. Now, we have so much more to get to, but we're going to go down to the boardroom where our live coverage will continue in just a moment. We'll be right back.
Good afternoon and welcome to the New York Stock Exchange. We are so privileged today to have Synchrony here to celebrate your 10 years of listing and ringing the closing bell to bring visibility to all of you in the room today. So, first of all, thank you on behalf of Andrew Bjorkman and the entire NYSE team for the partnership over the last 10 years. A decade ago, you raised $2.88 billion in your carve-out IPO at the 30th largest IPO in the top 30 of all time, the top 15 capital raise for a financial company, and you're continuing to innovate. So over 100 years. So 10 years with us and in the public markets, but 100 years in the making. So date back, roots going to the Depression, offering financing solutions to individuals to literally buy appliances to help improve the quality of life around the world. And now you're still doing that. You're the largest lender, credit card lender by number of accounts, and continuing to grow. Some of the data is pretty mind-boggling, and we're just so impressed with that. So everyone in the room, I understand associates who've been here between 25 to 52 years. Lori Fair. That's incredible. It's a pleasure to meet you all and bring you all together here today. So for those of you who haven't been to the New York Stock Exchange, real quick, I want to give you a little bit of history. When you walked in the building, if you looked over your shoulder, there's a giant statue of George Washington. That's the location of the first Capitol of the United States, where our first president took the oath of office. The Bill of Rights was ratified. Congress and Supreme Court met for the first time, and Alexander Hamilton penned the report on the federal credit. So a couple short years later, 1792, the New York Stock Exchange was founded. So we hope that you take stock in where you are today, have some fun, but before we go down to the trading floor and close the market, Brian Wenzel, if I could introduce you to the group.
Well, Tara, thank you for the kind words. Thank you for understanding our company, and thank you for the partnership with the New York Stock Exchange. It's been a great relationship over the last 10 years. Synchrony team, we ready to do this? You know, as we moved up towards our 10th anniversary, a lot of us thought about where we've been. And this room has a lot of long-tenured employees who have been with us a long time, seen a lot of changes. And I think about this company, and yes, we're 100 years in the making. It's really important to understand where our heritage was, where we came from, our focus on consumers from the early days all the way through. And then 10 years ago in this building, this very historic building, we began another chapter in our history. Right? Since then, we've been able to grow our receivables 85%. We grew our tangible book value 3 times. We doubled our share price. That's good. And I believe everyone, thank you, DJ, are owners of company shares today. So thank you to that. So, but as we reflect, because we're doing the closing bell, closing 10 years, right? It's a time to reflect backwards, but it's a time to think forwards. And you think back, when I thought about this reflection, I thought about how many companies have not withstood the test of time, have not been able to evolve, have not been able to go forward. And I thought to myself, why is that? Why have we been able to succeed? And then look at the last 10 years, accelerate that success. It's because we went from 10,000 people at our IPO date to over 20,000 today. People that are focused on the values of our company, that are focused on servicing our consumers, that are focused on delivering for our merchants, partners, and providers. That's what keeps us strong. This culture keeps us strong. That's what's going to build a stronger next 10 years, and beyond that, a whole heck of a lot more. I want to thank you for coming here today. I know it's a long journey for some. Sometimes it's been a first time in New York City. Hopefully you have a lot of fun. We're going to go downstairs, and we're going to represent this company, all 20,000, and celebrate with them the closing of this 10-year window, but the true excitement, which I know you will show the excitement on the floor, of what's left to come in front of us. Thank you all.
We've built up some traditions, one of which is we don't like our guests to go away empty-handed. So Brian, we struck this medallion. On the front of the medallion, the 6 pillars in front of the New York Stock Exchange. We believe they represent transparency, opportunity, sustainability, capital, innovation, and community. And we're tremendously proud to have Synchrony to be as part of our listed company community.
Thank you. Thank
Great.
you.
All right. So gets a smaller version of Brian's medallion. We hope you take this with you and think about this important milestone and how everything you do every day really serves your customers, serves the company, serves your shareholders. Providing solutions, financial solutions and financing solutions for the right customers through the channels that they want and that they appreciate. I have one more gift for you. Your 10-year listing anniversary certificate.
Wow. So we got to come back more often. We get lots of gifts.
Anytime, we'd love that. I heard that a big group was here a month ago with an event on the trading floor. So come back, come and visit us. Think of this as your home away from home, field office in Lower Manhattan. But you know, we wouldn't be upset if you displayed this proudly on the wall in your headquarters. So you could do that too. Great. Before we head down, I'd like to pass the broadcast back over to Trinity, and we will see you down on the trading floor.
That's right, and we welcome him and the whole executive team and their whole team for that matter back to the exchange for any milestone celebrations, investor days, and we'll be covering it all right here. But again, that was Tara Jejic and Synchrony CFO Brian Wenzel. Now, joining me is Jennifer Streaks. She is the Senior Personal Finance Reporter for Business Insider. Hi, Jennifer. Thank you so much for joining us. Good afternoon.
Thank you for having me.
It's a pleasure. So let's just dive into these topics right now. So what are some of the biggest differences to consider when deciding whether to put your money in an online bank or a brick and mortar bank?
I think you need to think about whether or not you're going to need to go into the brick and mortar bank. Online banking is going to save you money. You may even get a higher interest rate for not using the brick and mortar. But if you need to go in, if there's an immediate issue that you need to resolve with your money, you may not be able to resolve it as quickly as you would like.
Absolutely. And you know what, as you know, time evolves, we're seeing different trends out there, right? So how are banking habits changing as Gen Z becomes more prevalent in today's workforce? Are you seeing that more people are opting for our online banks?
Oh, definitely. I mean, everyone is banking from their phone.
Yeah.
So being online, being an online bank, online servicer is very advantageous now because people are banking on the run. They want to be able to do it while grabbing their lunch or getting ready for work in the morning. So online banking is actually on the rise.
Yeah, and you know, Synchrony, like many other banks out there, allows its users to invest in high-yield savings accounts and CD accounts, both of which can come with higher interest rates, right? So it's widely anticipated that the Fed will cut rates at some point this year. So should consumers make it a priority to invest in these kind of accounts before that happens? What's your take?
I would do it right now. I mean, that's one of the things, one of the risks that you take with money markets, CDs, and high yield savings accounts is rate fluctuations. If you lock in your CD, from either 1 year to 5 years, you've locked in that rate, but then you've also locked in your money because CDs don't have the same flexibility or availability of funds that money markets or high yield savings accounts have.
And it's also important to note, like with CD accounts, you do have that limitation on time as to when you can actually pull out your money. But speaking of the Fed and interest rates, can you take us through how this impacts credit card spending? How much do you think, and if it will impact at all, but how much do high rates impact APRs?
High rates right now and APRs, they're almost neck and neck. Everyone is waiting to see what the Fed is going to do. And of course, we have higher rates at the grocery stores and the gas pump. So consumers are still spending money because they have to. So I see it all almost like churning in a financial ball, almost, where you have high APYs, high interest rates, and high consumer goods. So everything is sort of neck and neck at the same time right now.
And on that point, what's your advice from an investment standpoint as to how Americans should actually go about spending when it comes to using their credit cards in this ecosystem that we're in?
I think that you need to think before you spend. Actually think about, do I need to put this on a credit card because I'm going to have to pay that interest rate? If you need to make payments on that balance over several months, that higher interest rate is going to come into effect. So do you really need to make that purchase right now?
But also to, many Americans, or for people for that matter, worldwide, using credit cards and things like this could be very highly advantageous, right? Especially as you can apply miles to, purchase air travel, or I'm even seeing something out there where you can earn points by paying rent. What do you see?
Oh, definitely. But you have to make sure that you can afford to do that.
Yeah.
It's almost like deciding whether or not you're going to put yourself in debt for rewards points, because that's what it is. If you can't afford to pay that credit card off every month in full, which is the advice, then I wouldn't do it. I understand that the rewards are getting better, but that's a different kind of credit card user. Most individuals that use their credit cards for points, rewards, they also have the ability to pay that card off every month in full.
It's so funny that you say that, because when I was in school, I remember my professor teaching us, responsible spending, and they said, take that credit card, put it in the freezer, and if you want to buy something, you wait for that credit card to thaw out. So you kind of do process of elimination. Do you actually need what you are about to spend, and can you afford it? Well, anyway, thank you so much, Jennifer. I really appreciate you joining us on the show today.
And thank you for having me.
Absolutely. Now, switching gears a little bit, 3M, which trades here at the NYSE under the ticker symbol MMM, recently made news on the PGA Tour when it hosted the 3M Open in the Twin Cities just last week. Judy Shaw spoke with the company's public affairs officer, Tori Clark. Let's take a look at that.
We have been sponsoring since 2019 the 3M Open. Our hashtag, which you'll see everywhere, is Golf That Matters. And for us, that means many things. Terrific golf. It means a wonderful event to support local charities here in the Minnesota area. We've given, since 2019, $7.5 million back to local charities. A lot to do with STEM, a lot to do with First Tee, which is a great foundation connected with the PGA and 3M. And it's a terrific fan experience. You can come here and see great golf. You can come here and see the science and technology, 3M science and technology, that makes golf clubs better. It makes the space shuttle operate more effectively. It's just this incredible range of where our science comes to life.
Now, Tori, tell me, what's involved with being a title sponsor for a PGA Tour event?
It is literally tens of thousands of details. I mean, everything from where the booth from which I'm visiting with you, from all of the things behind the scenes that go on to putting a big tournament like this. It's thousands of people, many of them volunteers. It's collaboration between 3M and the PGA, with the local community, with local law enforcement who take such good care of us here. It's tens of thousands of details. But the most important thing is you have to stay united behind one theme. And for us, it really is golf that matters. It's different than other tournaments in a very meaningful way.
Now, you talk about community. It's a big piece of 3M's involvement. Talk to me about how 3M is making that come to life this week.
If you want to see some spectacular golf, come out and watch the spectacular golf. And that know in a lot of those clubs in the very heads, you will be seeing 3M technology. If you want to bring the family out for a great day and go to this fantastic playground that we built with one of our sponsors, the Primrose Schools, the playground itself, that whether it's the swings or it's the bridges they climb across, are put together with 3M materials. Everywhere you go, the steps you walk on are slip-proof because of our technologies. Everywhere you go, you see some demonstration of 3M technology. And that is, again, it's tens of thousands of details, thousands of people putting in an incredible number of man hours.
And Tori, tell me about the economic impact this event has in Minnesota.
The impact is huge. Every year, we have thousands of people come in from out of the state to be working on the tournament. Then you have, I think it's over 100,000 people attend the tournament over the week. We estimate it's between $40 and $60 million a year that comes back to the local economy, which is fantastic.
All right, well, Tori, congratulations on a fantastic event, and thanks for joining me on Floor Talk today.
Thanks, Judy. Come out next time.
Oh, I will.
Joining me now is this afternoon's bell ringer, Synchrony EVP and CFO, Brian Wenzel. Good afternoon, Brian. It's great to have you.
Trinity, it's great to be here. On behalf of Synchrony, thank you for the invitation.
Absolutely, and we want to have you back more, as Tara said in the boardroom. So let's talk about Synchrony and the past 10 years. Talk to me about some of the most proudest moments that you've had, some of the key milestones. Tell us about them.
Yeah, for us, it's really about people. It starts with people. We doubled our workforce from 10,000 to 20,000. It's about developing a culture. And when we separated from our former parent back 10 years ago, we had the opportunity to really develop what kind of culture we wanted to be. And when you look at it, it's manifested itself in all of our key things around flexibility, but really around being a number 5 great place to work, number 1 in the Philippines, number 2 in India, which really say what we do matters. And our company's been founded, we've been in the works for over 100 years, but the last 10 has been really fueled by our employees and what they've been able to accomplish in such a tremendous market.
And when you were talking in the boardroom about how it takes a hugely committed team to get to this pivotal moment where you are today, but also key partnerships along the way. Talk to me about some of those key partnerships and what they mean to you.
Listen, we are with some of the most iconic brands in the United States. When you think about our over 4-decade relationship with Lowe's, which we extended, our relationships with Sam's Club, which is long-standing. When you look at those relationships, they're built on foundation, they're built on trust, they're built on delivering for our partners. But not only that, Trinity, what we did is we've actually expanded out. We have exciting new partnerships, ones with like Verizon and Venmo. We've expanded our business into pet insurance. So a lot of great areas, and across our company, across the full spectrum of people, we service over 100 million customers, and it's a lot of different business. So we have iconic brands, we have new brands, new relationships. Our team just continues to find ways in which we can serve customers' needs for financing in the United States.
And you recently chose 100 employees to donate $10,000 each to a charity of their choice. How did you go about selecting those employees who would participate?
The first thing for us, to be honest with you, is we're so focused on having employees who represent our community. So all our efforts around DE&I, our affinity networks, they're really real. And what we know is people want to give back to their communities, and they have very special things that are important to them. So we said, listen, let's take 100 people, give them the opportunity to donate $10,000 to charity of choice. Tell us what's meaningful about those charities. So it's an incredibly difficult process to go through, because when you read the submissions and you read what they want, there are so many meaningful things. But
talk to me about the secret sauce, so to speak, behind such satisfactory employee ratings.
Yeah, it's about flexibility. We don't force people to come in the office. You can choose to work at home. You can choose to come in the office. It's allowing people to be who they want to be. Our affinity networks and DEI allows people to walk through the doors and be who they want to be every day. That flexibility, that authenticity, that's really special for them, which has really increased our people who want to work for a company and lowered our attrition rate outside of the company.
Incredible. Well, congratulations again, and we wish you more success.
Thank you, Trinity. Have a great day.
You too. All right, now we're going to toss it to a few live looks on the floor. When we come back, we're going to be speaking to Jay Woods. He's the Chief Global Strategist for Freedom Capital Markets. We'll be right back.
Trading desk, $28 billion for sale.
Jay Woods, Chief Global Strategist for Freedom Capital Markets, is joining me now to talk more about today's Fed decision. Jay, welcome to the show once again. Let's talk about how investors are reacting.
Yeah, they're reacting very positively. This is exactly what we thought would happen. We didn't expect a rate cut just yet, but the path to that first rate cut, that elusive first rate cut, is still on schedule for September. Jay Powell stuck to the script, watching things one data point at a time, but right now, his language is even more dovish than it's been in the past, so we're going to watch that unemployment data on Friday. If that comes in line or is a little hotter than expected, then I think that rate cut is all but a certainty for September. And the market, it's loving it. We're getting a nice little rally, and we've needed it. The S&P and some of the tech names have been down, so it's good to see.
Absolutely, and you know, we've seen incidents of markets moving one way immediately following the Fed decision. I love a good crowd. I mean, do you hear this? It's just another day at the exchange.
I hear them. I can barely hear you, so.
No, it's fine. It's fine. Just tell me if you need me to repeat anything. But you know, but then we're seeing the trends where it swings the opposite direction the next day. Why do you think this is, and what is the sentiment behind it? Does it change viewers' perception of this at all?
No, this is normal market volatility. We get 5% corrections a year in the S&P 500. We just had one. It was 4.9% to be exact. I'm going to round up. So this is, you know, the usual seasonal volatility. We had a great first half of the year, and what happened starting the first week of July? We saw a major rotation. The stocks that were lagging, those small caps, the stocks in the Russell 2000, they caught a bid. They're up 11% month to date, where the tech stocks, the big consumer names, they've been beaten up a little bit because people were taking profits in some of those stocks that were winners, rotating into some opportunities. So now we're seeing all indexes go up today, and that's what we wanted to see. So the rotation happened, and now hopefully we can continue higher from here.
You know, I want to dive into this topic a little bit deeper here. You're mentioning specific sectors, but are there specific sectors investors should be looking out for as we get closer to that Fed rate cut?
Yeah, the two questions I get asked the most are what's going to happen during a Fed cutting cycle. We anticipate it, the market anticipates things, so we're rallying into it. When it happens in September, we could see a sell-off. August, September, historically the worst 2 months of the year, so that trend could continue. I can tell you it's going to be volatile. We're going to see up and down action like we've been seeing, and probably into the election. A lot of crazy headlines, a lot of uncertainty, but I'll tell you one thing, after the election, what we've seen, especially the last two cycles, you know, crazy headlines, but we've rallied since election day into the end of the year. So I think we're going to finish the year out strong, but right now, a lot of volatility and a lot of noise behind me.
You know, I like how you, we only have about 60 seconds left, so let's keep this answer short. But speaking of, you know, major headlines, obviously interest rates is on the forefront of so many conversations, especially here on Wall Street. But what would you say when it comes to economic policy? What are the major headlines there?
Yeah, we're going to be watching the geopolitical risks that come out. Anything that happens in Israel that affected oil today, we saw a spike there. Politically, we're going to get headlines. I don't think the market's going to care. I tell our clients just put on earmuffs and focus on the economic data. It's earnings season. We're getting positive results. That is what we want to watch. That's what I think the trend will be going into the end of the year. Strong earnings, strong growth.
Strong earnings and strong growth. You heard it here first. But speaking of watching, I think we're all going to tune in to the closing bell. I wanted to thank all of you for tuning in to NYSE TV Live. I'm Trinity Chavez. Let's take you to that closing bell.
Built on a history of driving industry standards, Synchrony is rooted in expertise, passion, and a drive to do the right thing. This is where innovation happens, collaboration thrives, and bold changes are made to move our customers, partners, and people forward. Celebrating 10 years strong with industry-leading solutions and an award-winning culture, we challenge the status quo. The impact is clear. We are driving transformational growth for our customers and partners. As we grow globally, we grow together. We're shaping the future of financial services, always asking how we can become even better for our communities, our business, and our people. We embrace transparent conversations and celebrate diverse perspectives. We listen, we act, we adapt. For a decade, we've been guided by our values, ensuring innovation is more than a buzzword. We have a bold vision for the future, and the best is yet to come.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.